Hey, what's up, investors? Welcome to the 40 Finance channel. If you know anything about me, you know that I like PayPal. It is my number one holding in my stock portfolio. And frankly, at this point, I'm just starting to get a little ticked off about the PayPal stock price and how it just can't seem to break through. So I thought with this video, I'd go through some of the fundamentals of PayPal, compare it to a couple of other stocks that seem to have an endless supply of run-up, and we'll just take a look and I'll share my biased opinion on why I think PayPal is in a great place to buy now, particularly if you are a long-term investor. So a short recap of PayPal's earnings. They were very good, in my opinion, across the board. They were a little light on their guidance going forward, both for Q4 and for 2022. So they got dinged a little bit in the sense that their projections weren't as high as analysts, but it wasn't a huge miss from what analysts were projecting. And PayPal has a very high percentage of beating earnings, particularly over the past couple years. And so there's a reason that they bat so well on earnings reports. And if they want to call a couple bucks short of analysts, I'm perfectly fine with it. Helps us with our projections at home, even though some people sell off on news like that. Now, looking ahead next year, outside of sort of business as usual, PayPal discussed that they could integrate Venmo into Amazon checkout, which I think would be very interesting and an opportunity to take some transaction volume off of the #1 e-commerce site in the whole world. And for me, the one oddball scenario that folks are not talking about with that Venmo integration is that PayPal, not necessarily Venmo, but PayPal announced how you can trade cryptocurrencies. I think it's limited to like Bitcoin and a few others, and use the proceeds from those crypto holdings to actually shop at any PayPal e-commerce site or any e-commerce site that accepts PayPal. And what happens there is, let's just use Home Depot as an example. You can use your Bitcoin to pay for your lawnmower. Home Depot still gets American dollars. PayPal does all the translation on the back end, so they take Bitcoin from you, they pull it into their own world, they spit out dollars for Home Depot, and everybody's happy. But if that kind of thing started to happen with Venmo and subsequently Amazon, if that integration was there, well, then we're starting to see the future really take shape on cryptocurrencies, particularly in the Amazon front. So keep an eye on that. Again, that's speculation on my part, but that could be something we see in 2022. All right, let's stop first at Stock Rover to get a feel for where PayPal sits today. And you can see that I've stacked up some competitors in the financial services sector. We've got Visa, Upstart, Square, PayPal, and Affirm. So I think that for me, I've taken some of the hot names of that list. I own PayPal, Square, and Visa. I do not own Upstart or Affirm as of yet. But for this, we're going to focus on PayPal. This is the Insight column, 1 year look at the PayPal stock price. And you can see maybe while I'm starting to get a little frustrated with a company that's done very well this year from a performance standpoint, but certainly not a stock standpoint. 52-week range is labeled as 178, so I'm going to guess that that happened in here somewhere. And of course, today we're dripping it down to the $200 mark. And just as a note, I did add 5 shares of PayPal yesterday, and as long as it hovers in this area, I will continue to buy little slivers here to add to my existing holdings. All right, looking at the quantitative scores or algorithm scores for Stock Rover, they've got a fair value of 253. They put low confidence here in the financial services sector because these stocks often have liabilities and sources of income that cannot be captured by analysis of cash flows, making this fair value less certain. just a fair statement. But I'm going to take the 253 for what it's worth, and that gives us a margin of safety of 25% from today's price. Value score out of 169, gross score 98, quality 95, sentiment, which is sort of your momentum type score, obviously a little bit lower, coming off of what some people viewed as a bad earnings report. And let's get down to our estimates here. This is from a conglomerate of analysts, and average target price right now, my guess is that's about 300. We'll take a look at TipRanks in a minute. Price to earnings, 49. Forward PE, 35. Peg forward, just under 2. EPS current year change, 31%. 5-year EPS growth estimate, 24%. Sales growth next year, 22%. All right, putting them up on the benchmarks against the financial services sector and the S&P 500. Let's skip down to year-to-date and look at this year-to-date return for PayPal, minus 13%. 6.5% was the industry and 25% for the S&P 500. So folks like me who are in PayPal, as opposed to the S&P 500, ETF, that's a spread of whatever, 38%. Now, the year's not over yet, so let's just see what happens. But at least where we are here in November, PayPal is losing out to an S&P index fund. All right, let's compare PayPal to some of their friends. First of all, Affirm. I just threw on here, it's going to be a little hard with Affirm because they are not profitable yet, and they obviously have not been on the market for a very long time. But just for kicks, we're going to throw them in. They're at $133. Then we have PayPal about $205. Square at $230. So this one's important, okay? Square, which I also own, is now, let's call it $25 more per share than PayPal. So keep that in mind when we go through some of these other metrics. Upstart, right now about $256. Upstart, to its credit, is very slightly profitable. Looks like their EPS is about 67 cents. But let's keep in mind that their price of $256 is $50 more per share than PayPal. And then we have Visa at $215. They're about $10 more per share than PayPal. So let's break this down a little bit, and we'll start with just the simple analyst projections. Affirm at 133, their mean target price of 143. PayPal at 204, theirs is 320. 227 for Square, 291. 256 today for Upstart. We've got 308 as a target price. Visa at 215, looking at potentially 272 from an analyst view. Now comparing the Stock Rover, fair value, Affirm, and Upstart. I think even though Upstart has some earnings, I'm not sure that it's been calculated as 100% profitable yet. So that would throw a wrench into these fair value calculations. PayPal's fair value we saw earlier, 253, Square at 206. Visa at 219. So from a margin of safety standpoint, at least in Stock Rover world, 2% on Visa, 24% on PayPal, and minus 9% on Square. All right, now we're in growth rates. Stock Rover has a pretty cool column here, the sustainable growth rate, which I'm going to show you. It attempts to measure how much a firm could grow without borrowing more money. If the firm exceeds this rate of growth, it must borrow funds from another source to facilitate the growth. It is calculated by multiplying a company's return on equity by 100 minus the payout ratio percentage. So Affirm right now, it just, at minus 38%, they're saying likely we'll have to borrow more money to reach, a positive growth rate. PayPal's sustainable growth rate at 23%, Square at 18%, Upstart in single digits, Visa at 21%. And scroll this over here, get a better view of these. Sales growth next year, Affirm 44%, PayPal 22, Square single digits, Upstart 41, Visa 14. So you see with these hot names, Upstart and Affirm, there is a lot of sales growth going on, and that's where you get sort of the eyeballs for things. But how does it affect EPS? Affirm probably still won't be profitable. PayPal will jump 23% EPS if they hit their numbers. Square 16, Upstart at 25%, which is interesting. Visa at 19. All right, let me bring this one over. This is 5-year, and of course this is an estimate 5 years in advance, so not super easy to do. 5-year EPS growth estimate, minus 43% for Affirm, PayPal at 24%, Square at 50%, Upstart at 90%, Visa at 18%. So with Upstart, we'll probably have to do some math, maybe in a separate video, to figure out could their EPS, if it really did hit an 89% growth rate, could it reach PayPal's level? You know, when would the actual crossover take place? I can tell you that if they're at 60 cents today, we've got a few years on paper before they should be matching PayPal's stock price. All right, now let's try to look at some things on a share level. What do you get when you buy a share of each of these companies? Simple one, and we'll just go EPS diluted, minus $3 or so for Affirm, $4 for PayPal, $1 for Square, 67 cents for Upstart, $5 for Visa. All right. Cash flow per share. So cash flow gets a lot of attention these days. Minus $1.21 for Affirm, PayPal at $4.82, Square at $1.50, Upstart, very surprising in there at almost $3, and then Visa close to $7. But what's the free cash flow? It's about the same for Affirm, $4 for PayPal, $1.19 for Square, $2.77, so not a huge hit from Upstart's number previously, and then $6.64 for Visa. Visa, as you know, also throws in a $1.50 dividend per share, at least as of today. All right, now let's look at cash and debt. Affirm has $5 per share cash, $7 in debt per share. $10 for PayPal versus $7.50, $7.60. Square leading the way at almost $15 in cash, also leading the way though in debt with almost $13. Upstart $6.63 in cash, 31 cents in debt, so they are the lowest on the debt side, which is very interesting. Visa $8.76 on cash, $9.77 on debt. Sales per share, so sort of a revenue per share. $5.50 for Affirm, $20 for PayPal, $30 for Square, $5.73 for Upstart, $11.02 for Visa. So obviously when you compare the sort of up-and-comers, if you will, people are buying these early at inflated prices to see if they would eventually catch up to folks like these. I guess my argument for showing a lot of these metrics is you're reaching to some degree on a company like Upstart when you can just have what PayPal is doing right now. And it's not just about right now, it's also about boxing out competition. It's also about being able to sleep knowing that some of these results are already in the bag. All right, last one we've got here, gross margin, Visa, Affirm at 62%. So this might explain, why folks are excited about Affirm with a gross margin that high. Doesn't look like, though, it translates very well into operating and net margin or EBITDA margin for that matter. But after Affirm, you've got PayPal, Square. Upstart metrics show as 0. I'm guessing they just don't have the formulation for theirs. You get down to the brass tacks of net margin. You got Visa leading the way. PayPal, Upstart, Square, and Affirm. All right, now I'm going to take out my opinion and just go with TipRanks best performing analysts across Wall Street to show you what some of the price projections are for these stocks. Remember, we have PayPal today at 204. We're just using the top analysts, and those are the ones that are scored the highest by TipRanks in terms of their historical performance. And I think everybody's had a recent earnings report, so you can see here off to the side, we go by date to get the freshest information. And you have, looks like a lot of 265, 270 maybe for PayPal, somewhere in the neighborhood of 20 and 30%. You do have one hold, but the rest are buys. All right, same thing on the Visa front. It's been a couple weeks since Visa's earnings report, but again, not as much upside perhaps as PayPal. Got roughly 25, 27% that I'm seeing in here. Looks like the 265, 275 range appears to be the most popular. If you were 270, that would represent a 25% upside from today. So when we saw the year-to-date returns for PayPal, and I think Visa's in this same boat, how it's underperforming the S&P, you know, if some of these prices come into play for both of those stocks, is they would seemingly outperform the S&P next year. If you're in that 25 percentile of price growth, that would be a heck of a year for the S&P 500. All right, now let's look at Square, who I would argue, you know, probably had the weakest fundamentals of the stocks we compared. You got several updates since their earnings. If I eyeballed this, you've got a decent chunk of 315s, which is 38% upside. The freshest ratings, though, dropped down to about 250, which is only 10% up from here. I'll tell you one thing, the reason I bought Square and the reason I wouldn't sell it despite the stats that I just walked through is mostly because it seems to be a momentum stock, and it seems like for every good headline that PayPal publishes, aka the Amazon thing, you know, PayPal gets mixed reviews from it. Now, I'll say if Square published that exact same headline and it said Cash App instead of Venmo, I think Square stock would have went up probably $300. Okay, so it's just the way that people think about certain stocks and the way they invest in them. Square's one of those, so out of all the stocks I own, I would say that they're one of the more momentum plays. I would put them right next to Palantir. Both of them I have a fundamental investment thesis for, but it doesn't slip on me that they have this momentum play, that they're only a headline away from going up $50, you know, the very next day. So that is part of the reason I hold Square, and it's also certainly part of the reason I hold Palantir. All right, let's look at Affirm. Got a couple, and I think Affirm's reporting today, if I remember correctly. So this could change, a lot of this stuff could change. To be fair with them, I think that they are the farthest away from profitability, but they have a potential to change their trajectory quite a bit today, depending on how earnings go. Right now, you've got past 21 days, you got 3 buys and 2 holds. People look to be sitting in that 150 to 170 range for Affirm. All right, lastly, we have Upstart, and they just reported yesterday. Now, they're not going to have as many analysts covering them, certainly not the best performing analysts, only because you know, they don't have a long track record. So with a shorter track record, professional analysts are going to be looking at EPS, sales, cash flow over a broader length of time, which is kind of eliminated with Upstart. So you have to start getting into some different theories to project a company like Upstart in the future. Now, it does look like we have 3 analysts that are in the past 24 hours. Sorry about that. And we have a price target of 300. That's 17% up. Then you have 1 sell with a downside of only 0.62%, and then you have another 300 here. All right, guys, so I went through a lot of metrics comparing PayPal to other companies, and you know, the point of this video was really just to share some of the fundamentals that I see with PayPal, and of course, I'm very biased because I own PayPal, but I just wanted to show a little bit of how the numbers look on paper compared to some of these stocks that you hear about, you know, every single day. In my opinion, PayPal is beating them across the board, but it hasn't translated into a huge investment run yet. That's okay. I'd rather have the scoreboard looking good in terms of fundamentals because I know that the price will catch up eventually. I would say the outlier for this video certainly was, you know, Upstart had some life in there. Nobody's going to argue that that stock's cheap at $265, but there was some life in there, and that could be one. If you saw a dip or you saw some weakness, they just had a little bit disappointing earnings report. They still grew, just not at the same pace. Maybe that's one you stash in the back of your portfolio. You're going to have to wait 5 years for that to really perform in the long run, and you're going to have to hope the company doesn't go bankrupt in the process or competitors move in. But I would say that out of the stocks we looked at, I was most surprised by Upstart's fundamentals. All right, guys, thanks as always for watching. Please give a like, subscribe to the channel, all the things. We'll see you on the next video.